All right. Well, thank you all for joining. Very excited to be presenting today. State and federal compliance is definitely a crucial component of running a business here in the U.S., and we're really excited to share some crucial knowledge on what you need to know to get your business kicked off on the right foot, and then also to keep your business on track. And doing that really in an easy way so you can stay focused on, running your day-to-day business as opposed to focusing on these administrative tasks that tend to pile up. So I'm your host today, Frank Tuminello. Pleasure to be speaking with all of you. Thank you for joining. I am co-founder and CEO of FileForms. Before FileForms, I worked in a variety of different financial services roles, largely within the investment banking and private equity space, but all focused on financial services and highly regulated industries. Really spent the lion's share of my career investing in businesses very similar to FileForms, and then had a great opportunity to actually build a business that works with now over 100,000 small businesses, which we're very proud of. So very excited to be speaking with you all today. And I'm also joined here by our special guest, Max Burns, who's a CPA at Sagemont Tax and an expert in the employee retention tax credit, amongst other tax credits. So I will kick it over to Max for his brief intro.
Yeah, nice to meet everyone, and thanks to Frank for having me. As Frank mentioned, I come from a background of accounting in New York City. Prior to my ERC specialization, I did M&A tax for private equity and corporate strategic buyers, largely federal taxation and cross-border taxation. And I've been specializing in the ERC since late 2021. So I'm here to give you a quick 101 and hopefully educate those who need to learn about ERC before the deadline comes up in April.
Certainly. Great to have you, Max. And, the ERC is a very timely topic in the realm of federal compliance, as that deadline is just 30 days away, which is wild. So quick agenda on the topics we'll cover today. We'll give you a little more context on who we are at FileForms, why you should care about state and federal compliance, broadly speaking. We'll give you an overview of the frequency of the filings and what you need to know to file in order to keep your business on track. There have been some recent federal updates, specifically on the BOI reporting front. So some kind of surprises there over the last couple of weeks, which we'll definitely want to keep you in the loop on, and we'll continue to monitor those for you. And then just generally, broadly speaking, deadlines, penalties, considerations to keep in mind, how to prepare your company or even your clients if you're a professional serving SMBs, and then ultimately how we can help as a platform to streamline these filings. And then we'll kick it over to Max for his overview on employee retention tax credits and ultimately how businesses can qualify for up to $21,000 per employee, which is a pretty good amount of money. So just a little bit on FileForms. FileForms is an industry leader in federal and state compliance technology. We've been around for over 2 years now. We have a team spread out throughout the U.S., and all our members are here on shore, including our development team. We're based in Fort Lauderdale, Florida, but have folks up in the Northeast and the Midwest and throughout the country. We're really focused on providing industry-leading solutions to effectively automate a lot of the compliance forms, both at the state and federal level, that businesses need to file in order to stay on track and avoid unnecessary deadlines and missed deadlines that ultimately could lead to penalties. We work with over 100,000 businesses, 10,000 professional service providers, and continuing to grow that population as we expand our service lines, now offering the full suite of corporate services in our technology. We also have a high level of focus on compliance from our technology, privacy, security, et cetera. We are SOC 2 compliant, and actually have received a lot of rewards for our technology, both from a privacy standpoint and a security standpoint, but also from a credibility standpoint within the various associations of professional service providers and accredited businesses. So we're very proud for that. Ultimately, why one should care if you're a business owner or professional serving businesses, why you should care about compliance at all? Well, virtually all businesses must file with the government in some capacity. They're either filing an annual report at the state level, for example, in order to maintain good standing with the Secretary of State and operate in that state. This is a report that needs to be filed. On that annual report, businesses must disclose their registered agent. A registered agent is a public address that communications from legal professionals or even governments to kind of share notices and communications around your business. So we'll go into more detail there. Also, recently, the BOI reporting requirement has now shifted once again, so we'll cover more on that. But effectively, right now, foreign reporting companies are the only ones that will be enforced the filing requirements. So we'll cover the updates there, which continue to evolve. Generally speaking, deadlines are approaching, so folks will need to be aware that if you're operating in certain states, each state has a different deadline, for example, for the annual report. So we have an amazing tool, actually, that we'll share with you as we get deeper into the presentation that can be used so you can track your deadline amongst many states. Effectively, our technology does that for you. So if you're interested in signing up, that's an easy check of the box. And then, we built all this technology effectively because we realized as practitioners, as business owners, that analysis, data collection, all these forms, pretty complex. And there's a lot of overlap amongst all the different forms. So it was the perfect use case for automation. Furthermore, these forms contain very, very private information on businesses. So really want to emphasize the need to use secure processes such as technology to really mitigate the cyber risk, whether you're a business or serving businesses. And then lastly, penalties are steep if these filings are missed. These government forms are taken very seriously by the government. So ultimately, it's a pain when you have to pay an unnecessary fine, when ultimately there could be a solution that could help you stay on track, which we provide in our technology. So we'll start with state compliance because it's probably the most timely right now. If you are a business owner operating in a state, you may be used to filing an annual report, hopefully. If not, you might have already lost good standing, which we really hope isn't the case. But ultimately, an annual report is a snapshot that's provided to the Secretary of State that allows the Secretary of State know where your business is operating, who the business is operating with regards to the key individuals, and then ultimately where that business is operating out of, and any changes that happen year over year is effectively reported on that annual report. Alongside that information, there's also a registered agent listed. So a registered agent is, as I mentioned, a public address that's used for state and public communications. So those two forms really do go hand in hand. When you're operating a business, a lot of times, businesses will form in a state. For example, Delaware is a very popular state. That's the state of formation where the business is initially registered. But a lot of times that business will be operating across many states. And what a lot of people don't realize is that those foreign states, as we call them, those foreign states also require these filings in order to maintain good standing so that the state effectively knows who is doing business in their state. So if you do run an internet company that operates across all 50 states, or maybe a logistics business that's crossing state lines regularly, or really any business for that matter that's operating in more than one state, it's really important to know that there's easy solutions out there to help track all these state deadlines, track all these different filings, because business owners have enough to worry about at the end of the day. And it's really difficult to track all these filings because each state has a different deadline. And that's a huge nuisance. And a lot of states have different requirements that will determine whether you need to file or not. But our technology can really help you with that and make this easy. And then lastly, a lot of folks tend to use a third-party registered agent address because they do not want that public address to be their business or their home. If you run a home-based business, people prefer to keep that private. So using a third party, especially in states where you might not actually have a physical presence, you're going to need a physical address in that state. So using a third party to receive that communication and have that presence can be helpful. These third party registered agents are able to receive that communication on your behalf, keep communication confidential so that, God forbid, if your business is being sued or someone's making a claim against your business, that's not getting into the hands of an employee or getting spread at the water cooler. Third party registered agents really help kind of keep that confidential, that information confidential, and then ultimately provide an address that is also private for you and for your business. So hopefully that's helpful background on the annual report and why a registered agent exists and ultimately how one can approach that state compliance requirement. Moving right along to federal compliance, I want to let folks know that there is this new reporting requirement that folks might have heard of called the Beneficial Ownership Information Reporting Requirement, also known as the BOI. This was a new law passed in 2021 that went into effect in 2024. However, there's been a ton of back and forth on the enforcement of the CTA, when the deadlines are going to be. It's been a complete mess if you've been following this. But as an expert in the space, we've been doing our best to keep our clients aware of not only the requirements, but also ultimately if they need to file or not, and if so, when they need to file by. There's been start, stop for the last, call it 4 months on the BOI deadline. And ultimately, as we sit here today, as of March 2nd, there has been a pause on the enforcement of the Corporate Transparency Act. So I say that as it relates to domestic reporting companies, which a domestic reporting company is a business that's formed in the U.S. and operates in the U.S. And doesn't meet one of the 23 exemptions, which are very specific. So generally speaking, as the new administration took over, the Department of Justice and the executive branch have now put a pause in place. Effectively, the law still exists, so we'll see if there's a change. But as we sit today, there is a pause for U.S. businesses. So that hopefully is a relief for most folks on the call today. Hopefully, however, we're not sure if there might be another change to that. We'll get some more clarity by the March 21st, so just a week or two away. But thus far, foreign reporting companies are the ones that will need to report a BOI report, not the U.S. reporting companies. So a foreign reporting company is essentially a business that's formed outside of the U.S. but does business here in the U.S. So the government still would like some clarity in their database as to who those companies are. And as if folks aren't aware, the premise of the Corporate Transparency Act was for the government to effectively have a database to better police the financial system here in the U.S., ensuring that anonymous shell companies aren't being used for money laundering, terrorist funding activities, and other illicit activities as it relates to financial crimes. So that is the premise of the law. To no surprise, the current administration put a pause for domestic businesses, but still wants those foreign reporting companies to file these reports. But there'll be more clarity on the exact deadline before March 21st, which is just around the corner. And just so folks know, if they're like, wow, that's a lot of information, I'd almost just rather file than to continue to follow these government updates, which quite frankly is a full-time job for us and our team. FinCEN, who's the Financial Crimes Enforcement Network, is still accepting BOI reports as we sit here today. So if you want to just get the report out of the way, whether you're a foreign or domestic reporting company, there's no harm in doing that. And then if the rule eventually goes away, perhaps, we don't know if that will be the case, your information will, rest assured, be stored safely by the government and likely wiped away. So expect what's called the interim rule update and then ultimately a final rule update in the next few weeks. And that hopefully will provide more clarity. But just so you have a sense, only about 20% of all the businesses that are operating in the US, both foreign and domestic, have filed their BOI reports so far. So if you haven't filed yet, you're certainly not alone. But you will want to continue to join presentations like this where we can keep you informed or interface with our team if there are questions. But broadly speaking, shifting back now to state compliance, I wanted to just highlight really kind of upcoming deadlines to keep in mind. And as I mentioned, this is really what makes it challenging to stay ahead because a lot of companies do operate across many states. Each state has a different filing requirement, which makes it tricky. And then some states have this rolling filing requirement based on when your formation date is. So effectively, you'll want to do the diligence as to when the deadlines are within the states you operate in. And fortunately, we have a phenomenal guide that my colleague Ian, or the host here in the chat, if you click there in the chat, there's a link. And if you click that link, it will take you to a nice interactive map that effectively will allow you to determine the deadlines of the states you operate in. Now, that link will also take you to a sign-up page that you can easily sign up and progress the filing process using our technology. And the nice part is we can allow you to upload your information once and get that information to all the state portals, which is a huge time saver. So example, Florida, which is where I'm calling in from today, they have a May 1st filing deadline. So that means if you don't file prior to May 1st, unfortunately, you have to pay a fine for the missed deadline. So it's really important to not pay those fines. Our technology makes it really easy to stay on top of these deadlines, and we also provide tools on our website that can help you determine when all your filing requirements are, in addition to that being in our platform itself. Generally speaking, the filings and the penalties for not filing your annual report on time are pretty substantial, unfortunately. It could range from a few $100s to a few $1,000s, depending on the state. But really the worst part is, outside of the financial hardship, is the loss of good standing. Loss of good standing can be really a big hurdle for businesses. Losing the right to operate under a specific name could impact branding or reputation. Inability to secure financing could limit your ability to grow your business or even keep the lights on in some capacity. Loss of limited liability protections, another potential risk, which obviously is substantial. And then just the inability to continue to operate in that state if misconduct is really persistent is another potential outcome. So annual reporting is really important. And with that, I will tee up our first question because we want to make this a interactive session. So our first polling question should be on the screen shortly. So, do you file annual reports in multiple states? Simple yes or no. Would love to know who the multi-state filers are out there, because you are likely the ones with the biggest amount of administrative work on your hands, and perhaps even looking for a solution to make that a little bit easier, because I don't think anyone's really taking pride in filing these forms, at least probably not as much pride as we take. So would love to see the results there. All right, we have a lot of folks filing in just one state, which is interesting because I bet you a lot of folks are actually operating across many states and perhaps might even need to be filing in all of those states of operations. In fact, you definitely do. So I might want to just think through, if you are operating in those other states, perhaps filing in those other states to maintain compliance. Otherwise, you could be putting your business at risk. would love to just touch on, how to prepare as well for these forms. So effectively, each state government has their own portal that you can upload your information into. And ultimately, if you're operating across many states, that is a manual process into each state, which does take a lot of time. We felt like that was a huge burden for small businesses. We work with a lot of companies that operate across many states. In fact, we are a business that operates across just about every state. So we can speak firsthand to how much hardship that can create. If you operate in every state, that could be as much as an hour per state, which is 50 hours of work, which is over a week's worth of work for the average person. And that's going to happen every year. So that's a huge hassle. But there's a great alternative. It's called FileForms. It's probably why you joined the conversation here today. It really helps address these pain points here because ultimately government portals are hugely inefficient. It's time consuming. It's a dry educational process. There's usually not education built into the experience. It could easily take an hour or two to get through all the different state portals and file on time. There's a good amount of margin for error, unfortunately, because there's a lot of manual data inputs. So if you're getting data from different sources, that could lead to potentially a misfiling. And then generally speaking, states aren't really providing great support. They don't have live chats or ability to hop on the phone typically. So we really want to just emphasize these pain points because we've lived them before alongside businesses like you. Ultimately, FileForms exist to really solve those pain points, taking the filing process from hours down to minutes. Not sure if folks are familiar with a brand called TurboTax, but effectively you could think of us as the TurboTax-like experience for doing non-tax things like state and federal compliance. We do have bulk upload features as well. So if you're managing a book of clients or even a large portfolio of entities, we have the ability to simply drag and drop that information into our platform, pre-populating your dashboard so that you can get started on the filings. And each company will be populated so that you can easily check the boxes of the states you operate in a matter of minutes, and then ultimately push that information to the state and receive confirmation that your filing is in good standing. We also have expert assistance available. We have many CPAs and attorneys on our team willing to provide support as needed. Furthermore, we do store that data securely. As you recall, we're SOC 2 compliant. Ultimately, we provide these services across all 50 states in order to provide that ease of use for our clients. And that is a huge time saver, cost mitigator, and ultimately can be even a revenue generating if you're providing these services on behalf of your clients. Lastly, we also provide data monitoring solutions so that if there's changes or if, say, for example, there's an upcoming deadline that you need to be aware of, all of that's going to be a function of our application to keep you aware of ultimately what you need to do and when you need to do it by. So I'll pause there, and I believe we have another polling question, which we can address now. How many companies do you need to file for? Some folks might have 1 to 10. Other folks might have 10 to 50. Other folks might have more than 50. We've seen a lot of those lately. I think a lot of folks that have a lot of entities are really looking for a solution because they know what it's like, how each of those companies could have several filings per company. And that's weeks worth of work, maybe even months worth of work. Well, we have some folks that seemingly are filing 1 to 10, and then the other folks 10 to 50. So overall, could definitely be saving folks hours of time, tens of hours of time. And that's really what you have to ask yourself. You need to ask yourself, hey, do I need a solution? Do I enjoy doing this work? Do my clients know they even have to do this if you're serving small businesses? And it's really important to make folks aware that these deadlines are coming and to have a process in place to do it. So we actually are able to provide you all you need to provide this service to your clients, or all you need to effectively manage your portfolio of companies to do this efficiently, or your companies. So we can provide you the technology to do the filings, the email notifications or the email templates that you can send out to your clients. For example, if you're a CPA in the state of Florida, sending out a notice, hey, by May 1st, you need to file this report with the Secretary of State. Click here, here's a solution that can walk you through the process and make it easy. If you are a foreign business that's operating here in the US, you'll likely need to get an EIN to file your BOI report. So that's that federal compliance form that we addressed earlier. You also need an active ID to file that. So, those two things you'll want to get done prior to the deadline, which we'll figure out when that will be shortly. But also identifying the clients, just as we kind of did here on this presentation, identifying those who have a lot of filing to do is really important because they actually might be the ones that need a solution. So when you take a step back, you can probably quantify how much time you can save by using a solution that will allow you to file in all 50 states in a matter of minutes. So that's really the mental exercise to consider as you consider filing on your own or filing with the support of our team and our technology. We've partnered with thousands of CPAs, bookkeepers, attorneys, company formation businesses, even, and a large number of family offices and investment professionals as well, because those are typically the ones that are managing many, many entities. And, we have testimonial after testimonial that's able to express the remarkable experience, the time savings, the lack of needing to hire people, the ability to let people focus on more important tasks, and ultimately a number of very, very strong revenue cases for folks that are reselling our services. And with that, I wanted to pivot the conversation over to Max, who's now on screen. But also, if you have a minute, or you can either scan these QR codes to get started on an annual report, book a demo to learn more about our solution, and how we can provide our platform to you in a fully white labeled experience so that you can provide it to your clients and ultimately create a new revenue stream, or even file a BOI report and use Webinar 2025 as a promo code for 20% off. So if you look in the chat, there will be a demo link to get started with a demo if you're interested in learning more about FileForms. And then also these links to get started on BOI or annual reports. And with that, I will kick it over to Max.
Thank you, Frank, and good afternoon again. As I mentioned earlier in the call, I've been specializing in the employer retention tax credits since late 2021. The ERC has had a few very action-packed years with a lot of noise surrounding it, and it's finally sunsetting on April 15th of this year, which was 5 weeks from yesterday. So we're going to go quickly through the latest news on ERC and the 101 on qualifying and claiming the credit. The ERC remains quite lucrative still. So if you have not considered or taken the credit, it's certainly worth exploring whether your business may be eligible, so you don't miss out on this money that you deserve. So this slide is really to show that there's a lot of tailwinds for taxpayers looking to claim the ERC before the deadline. The moratorium on ERC processing, which was issued in September of 23, coupled with proposals to prematurely terminate the ERC program, has generated a lot of uncertainty out there as to whether claiming the ERC is a worthwhile endeavor. The developments here in this PowerPoint slide have, in our view, made it significantly more likely that valid claims made before the April 15th deadline will ultimately be paid by the IRS. Firstly, there has been a resumption of ERC processing. If you recall, there was so much noise with the ERC in the last few years that the IRS issued a moratorium for any claims filed after September 2023. And the reason why there was so much noise is because the IRS was trying to make it very easy to claim this credit when it was released during the COVID times. And as a result, you do not have to submit your supporting analysis in order to claim the credit. So you had a lot of bad actors rushing in there to claim for the full amount without doing any analysis. And the IRS had to put a pin in that processing to try to sort the good claims from the bad. However, on August 8th, 2024, the IRS did significantly modify that moratorium, changing the definition of post-moratorium claims from claims made after September 14th, 2023 to claims made after January 31st, 2024. The second bullet here, it's referencing a highly publicized court case on ERC right now, where a firm named Stenson Temerin is suing the IRS for a number of things, but namely for its poor guidance in educating taxpayers on how to qualify for this credit and for its disjointed guidance. The IRS attorney in this case, Amy Matchinson, in testimony before a federal judge stated, and I quote, "There is nothing preventing taxpayers from filing ERC claims right now. The moratorium is just on the processing of new claims. It's not on the accepting of new filings." So that was positive. On October 10th of 2024, the IRS announced continued progress on ERC claims with processing underway on about 400,000 claims, representing about 10 billion of ERC. They continued to say on December 13th, 2024, from the IRS commissioner at the time, Danny Werfel, that the IRS has teed up another roughly 500,000 to 600,000 claims for approval in 2025, which is this year. Interestingly, when Trump took office, he appointed and nominated a new IRS commissioner to replace Danny Werfel. The previous IRS commissioner, Danny Werfel, was a vocal critic of ERC. However, Billy Long has been a known advocate of the ERC program. So everyone's very excited to see what he does if and when he finally takes office. And then lastly here, there's been some legislation over the last year or so that looked to early terminate the ERC, namely the Federal Disaster Tax Relief Act of 2023. But that does not include any language to early terminate taxpayers' ability to claim the ERC. Okay, so how much can an organization claim? There are now 3 quarters left in which you can claim ERC, Q1, Q2, and Q3 of 2021. Now, if your business is eligible, employees that are paid up to $10,000 of wages or more in that quarter can qualify for up to $7,000 per employee. The credit is 70 cents on the dollar up to that 10,000 number mark. And of course, the credit is on wages earned. So an employee can earn less than the $10,000 wages and still get 70 cents on the dollar of that credit. So if they made $10, the ERC could be $7 provided they were eligible in that quarter. If you're eligible for all 3 quarters of 2021, you can potentially generate up to $21,000 per employee, which, as you can tell, gets significant very quickly. The rules are a little more complicated than this simple calculation. You have to back out PPP wages, if applicable, and any wages to related parties of a majority owner. But that $7,000 per employee per quarter is the max that any individual W-2 can generate. So how does an organization become eligible for the ERC? Well, there are 2 tests. The first test is largely an accounting test, and the second is really a legal test or a governmental orders test. And you only need to meet one of the 2 tests, and each quarter is tested independently. So you can meet quarter 1, 2021 under test number 1, and then meet quarter 2 under test number 2, or both. Eligibility occurs under test number 1, the substantial decline in gross receipts test, when a business's gross receipts in a 2021 calendar quarter decline 20% or more as compared to the gross receipts of the same calendar quarter in 19. So you're looking to compare apples to apples, right? Q2 21 versus Q2 19. Was there a 20% decline in revenue or more? We recommend this test be performed by a CPA that is fully knowledgeable of the ERC rules and regulations, as there is some accounting work there. The second test, called the full or partial suspension of operations test, or FPSO as we like to call it, looks to see if governmental orders resulted in a 10% or more reduction in an employer's ability to provide goods or services in the normal course of the employer's business. So, for example, businesses that had to make significant changes, such as increased sanitization, social distancing, capacity restrictions, or other health and safety precautions due to government orders, may qualify under this second test. We recommend that FPSO test be performed by a tax attorney that is fully knowledgeable of the ERC rules and regulations. So why did my accountant tell me I'm ineligible for the ERC? We see this all the time, unfortunately. The first thing we see is that CPAs and auditors, they prefer objective tests. Accountants, I'm a CPA, so I can say this, are more comfortable with empirical, quantitative, and accounting-based evaluations. And so they just don't really understand the second government orders test. The accounting test looks at a significant decline in gross receipts. It's very straightforward. It involves a basic exercise that leads to clear, definitive conclusions. However, as business owners may know, revenues do not always paint a full picture of a company's struggle with COVID. For example, certain segments may have survived while others got decimated or crushed. And that's why the IRS released this second test, full or partial suspension of operations. This test is subjective. It's facts and circumstances based and not a financial statement test, therefore making it open to interpretation. And traditional CPAs just really struggle with this test as they're not accustomed to applying subjective analysis in their work. Ultimately, the ERC analysis requires both lawyers and accountants. You need accountants to look at the gross receipts decline, calculate the credit, prepare the amended payroll tax returns, and file with the IRS. And you need attorneys to evaluate the government orders in place during the eligibility period and provide a cohesive legal analysis demonstrating how COVID restrictions impacted the company's ability to provide their goods and services in normal course. So what to look for in a qualified advisor? As I mentioned before, first and foremost, check their website to see if they have accountants and lawyers on staff. Some of these ERC firms, you go to their website, you can't even find a single person, let alone a CPA or an attorney. It's very important to really have both, as this analysis requires both. The second is, look for someone with full or partial suspension knowledge. There's a lot of nuances in this test, and it's really important given, it's half the eligibility. And lastly, look for a firm that has experience working with the IRS and can support you under audit. I know for our engagements, we include audit support. If it occurs as part of the engagement, you want someone who's going to stick around and help you with your filing should there be any questions from the IRS. This is a few factors that list the differentiation between Sage1 Tax and our competitors. Again, look for someone who has CPAs and lawyers on staff. Look for someone who's going to provide legal guidance. Look for accountants who can calculate and prepare the filing. Look for a CPA who's going to sign the 941X, which is the amended payroll tax return, along with the company. We see a lot of firms that just proffer the final returns and don't agree to sign them. So they're really not taking any responsibility for your filing. And then lastly, I just want to give you guys a preview of what documentation is required. You'll see that it's pretty off-the-shelf items, full-time employee count, gross receipts for a few years, payroll and income tax filings, PPP information, and to the extent you took any other wage-based tax credits during 2021, it'd be important to have. But all that to say, this credit is a very lucrative credit. It's almost a once in 100-year credit, given how lucrative it is. And if you were around during 2021 and suffered from COVID in any capacity, it's certainly worth checking out. So I urge you to look into this credit, whether it's with Sagemont or another firm, prior to the April 15th deadline. Thank you, Frank. Appreciate your time.
All right. Well, I hope folks found that helpful, and you can shoot our team a note at info@fileforms.com as seen in the chat or on the screen there. And we'll go ahead and pull these QR codes up as well, just in case folks want to reap the benefits of booking a demo or filing one of the reports in a timely manner. I think that's all for now. We do these events every few weeks, so feel free to check in on our website from time to time to sign up for our next event. And hope you have a great rest of your week, and thank you again.